Markets still remember US President Joe Biden's recent call for OPEC members to boost oil production in order to tackle rising gasoline prices. Given that investments in new oil projects dwindled in the current economic situation, the only country from the group of oil producers that could increase crude output was Saudi Arabia. However, Riyadh also remembers that Biden promised to make Saudi Arabia as a pariah on the global stage. The Saudi Arabian Energy Minister Prince Abdulaziz bin Salman warned that the country could even cut oil production in the near future. Most likely, OPEC members will come to a similar decision. That's the way the largest oil producers intend to deal with a sharp drop in oil prices. This scenario takes into account a looming global recession coupled with a dampened demand for commodities, as well as the latest news regarding resumed talks between Western countries and Iran on a nuclear deal, which could return Iranian oil to global markets. Yesterday, in volatile midday trading, Brent crude first tumbled by 4.5%, but then recouped all of these losses. Despite strong downside momentum, the quote fell to fix below the 94 mark on the 4-hour chart. As a result, expectations of a continued downward movement were not met, and the benchmark returned to the resistance area of 98. In this situation, a buy signal will be generated only after the quote consolidates above 98. A downtrend will be relevant if the price falls below 94. In the meantime, gold prices fell to immensely low, just below the $1,740 mark. In just one trading week, gold futures lost about 4%, and this is a strong price change for this trading instrument, which points to signal of overheating on the short-term time frames. From a technical point of view, the yellow metal is likely to pull back up. The area of $1,715 or $1,725 can act as a support. However, there are almost no reasons for rebound from a fundamental point of view. Investors are fleeing to US government bonds and the US dollar, anticipating another big interest rate hike by the US central bank. Indeed, the Fed is forced to take an increasingly aggressive stance in order to bring inflation down to the target of 2% per annum. Last week, a number of the Federal Open Market Committee's voting members said that they were in favor of a further monetary policy tightening and a 75 basis point interest rate increase. At the end of this week, investors are hoping to receive some clues about the Fed's future plans from US Central Bank Chief Jerome Powell, who is set to speak at the annual economic symposium in Jackson Hole. The Russian currency's reaction to dollar volatility is rather weak. The quote is still moving around the psychological level of 60. Thus, price consolidation above the control level may lead to a range-bound trading between the levels of 60 and 61.50. Alternatively, the downtrend will be relevant if the price returns below 57.50 on the 4-hour chart. And that's all for now. We continue to learn developments on financial markets. We provide you fresh information. Subscribe to our channel and follow news with us. See you soon.